Hello Doge family, how are you today? Doge lovers, before going into details, I would appreciate if you like the video and subscribe to my channel. Together we will grow Dogecoin. What I say in my graphic predictions are always right guys. I hope it is useful for you. I will determine the buying and selling points for those who want to make short transactions. And I will tell you the important developments today. Dogecoin price analysis. Will it continue to drop? Dogecoin price continues to lose ground below the long-term descending trendline. Holding above 20 cents has given investors a glimmer of hope that market stability at the end of the tunnel is likely to lead to a recovery. However, with this support in the rear view, a new perspective comes to life. For example, the moving average convergence divergence has a lively bearish signal and is currently adding credibility to the bearish outlook. Note that losses will increase if the $0.185 support below is broken. The meme coin could spill some more to test May's support at 16 cents before a significant recovery takes place. It is worth noting that gaining ground above 20 cents will increase the bull's hold on Dogecoin. Further on, breaking above the descending trendline could significantly support the bulls, allowing Doge to break the extended downtrend and close the gap at 30 cents. In this current market, Elon does have less influence what they don't realize. Is that all that influence is continuing to build up his followers, continuing to go up the amount of people who listen to him, the amount of money he has in his bank account that he can use for different things that he wants to use it for, all of that is increasing very fast. So it's the exact opposite of true. If you indicate that Elon Musk has lost his influence over the market, he actually has more influence than he has ever had before. The reason why his tweets are not having as big of an impact on the price is twofold. The first one is that right now we are not in a massive bull market, it's a little bit more stagnant when it comes to the market. Once the bull market rolls around again, that is when Elon's tweets and Elon's big announcements will have a way more sway with what's happening. The second part to that is that Elon Musk is right now posting a lot of memes and things for fun. It's been a while since we've seen a big how to do it yourself so that you don't have to rely on someone else's technical analysis. And when I first started about 5 years ago, I was watching other people's technical analysis while I was learning about it myself, and after a while, years of looking at the charts, you can really easily see a lot of these patterns, and it makes it a lot easier. Even though it's still risky, especially crypto, it's still risky, but as long as you are aware of the risk and okay with it, go for it. But I think a lot of people are fooling themselves thinking it's just going to magically go up all the time. They don't know anything about Elliott waves. So if that's you, I have been recommending a book in a lot of my videos, Elliott Wave Principle by Forrest and Precher, and I'm also halfway done or close to it, making an online course that you could use to trade stocks or crypto, because these principles are the same for stocks or crypto, the chart and the psychology and how to read THGE chart and everything like that I'm using personally now. There are a million different ways to trade probably out there, but this is how I have been doing it successfully, and that doesn't mean, like I said, it's still a risk, and I'm not a financial advisor. This video for education. We fell below it right around here, right, and we bounced right back out, and I was like, oh, maybe this head and shoulders pattern won't end up fulfilling itself, right? Maybe we are just going to continue trending right around here, maybe start moving upwards and so far and so forth, right? But after that we had a small retest right around here and broke below once again before a tiny little retest and just insane amount of bearish movement since then, and I was still confused. I was like, wait, what's going on? We don't see any kind of significant volume picking up in the red. As you can see, we didn't have any red volume right around here at all when we were falling. You can see it down here, not much selling pressure at all, and usually when the head and shoulders pattern finishes, there's a lot of selling pressure that goes on right after, which drags the price down very quickly. However, I didn't see that. I was like, maybe this isn't going to EDN up fulfilling, we are going to bounce back up. But then what ended up happening is we had this massive sell-off on June 20th, so 2 days ago as of now. And in the morning, we just had a mass amount of selling pressure, which could have been from the Asian time zone, some crypto whales selling it of, and we went down all the way to about the 16.5 price mark for price point for Dogecoin, and we had a lot of red volume pick up, right, and that was a bad sign. I was like, hey, this could signal some bad news. We could be getting ready to buy in some more on the dip. Bekwase, if you take a look, the last time we had this much volume, red volume, was like Dogecoin. Unfortunately, Dogecoin, which has been circulating near the EMA 20 price for a while, has not been able to overcome it. Despite the shares made by Elon Musk during the day, the price cannot go above 20 cents in the last 24 hours. Dogecoin, which fails to break the EMA 21 cents level with a sudden movement, seems to have to experience more and more in the 23 cents to 26 cents range. In addition, EMA 20 tests unfortunately fall victim to traders who try to cut costs and chase short-term profits. The days of plus 30% gain for Dogecoin seem to be behind for a while. At least, the 21 cents level, which cannot be overcome with the support of Elon Musk today, points to this. Of course, Bitcoin's unstable movements and variable dominance levels have a share in the price drop. In the light of all this information, 0.21 support should be followed closely for the worst scenario. The break of this support and the fear of loss that will occur in investors may cause relaxation to the main support of 0.15, albeit for a short time. In the worst case scenario, it seems possible on the base support 0.10 chart. Otherwise, the price returning from the 0.21 level can gather the necessary strength for the EMA 20 test. If this rise is supported by volume, the SMA 50 line, or 33 cents, can be exceeded. It would be beneficial to sell profits from here because for a long time traders are trapped in the 0.20s and want to take some profit and relax. As I said in my previous video, guys, we must remain calm. I will read you a news for inspiration. Listen to this news until the end and let's understand what kind of process is this process. Let's sit in our minds. In the United Kingdom, authorities just announced a significant operation to seize what they called laundered proceeds of crime in the form of cryptocurrency. In what the news organization is referring to as Britain's largest ever seizure of cryptocurrency, and one of the biggest seizures anywhere, ever, London's Metropolitan Police confiscated $249 million worth of crypto, without divulging which kinds, specifically, allegedly linked to international money laundering operations. And although no one can fault authorities for investigating and confiscating any ill-gotten gains, the fact that police forces around the world are working to trace these funds suggests that crypto's untraceability and anonymity, two big reasons why cryptocurrency got popular in the first place, are now no longer assured. Nor is the UK the only source of headaches for crypto traders. In South Korea, Reuters reports that a law passed in March will require cryptocurrency exchanges to partner with banks and obtain a security certificate from the government if they want to keep doing business. The more regulations government piles onto crypto, the less attractive it might be to users, and the more expensive it will become. Now what indeed, it seems traders' enthusiasm for cryptocurrency may already be waning. According to data from the largest crypto exchanges, trading volumes for Bitcoin, Ethereum, Dogecoin, and other forms of cryptocurrency fell more than 40% in June, as CNBC reported yesterday. Half the market is gone, a crypto research analyst told CNBC. And with buyers now in scarce supply, there's less bidding to drive prices higher, or even support them where they're at. Result: cryptocurrency is now heading into the third month of a 2-month correction period, according to CNBC. Since early May, for example, the value of Bitcoin has fallen 44%. We've come to the end of the video, guys. I hope you understand what I want to say. Express your thoughts by commenting. Don't forget to like the video and subscribe to my channel. See you in the next video.